Hello, good evening. Time once again for business. Now, bankers have welcomed moves by the Bank of Ghana to possibly start implementing the new capital requirements this year. Joy Business understands the central bank is working to start implementing the new capital from this year. Sources say the regulator is likely to settle on 200 million cedis or 300 million cedis. It is, however, waiting for government's approval before the commercial banks can start with this capital increase. President of the Association of Bankers, Al-Hassan Andani, tells Joy Business the increase is inevitable because of current developments in the economy.
The economy has grown. If you look at the capital base of the banks, we, as an industry, have been expecting the central bank to raise capital requirements, minimum capital requirements. And I stress the word minimum because Ghana's economy is one of the strongest, probably one of the fifth or sixth largest economies in Africa. And for those of us who sit in institutions like this that are foreign owned, we are quite keen about the Ghana economy. And to the extent that we find opportunities, the minimum capital remains the minimum capital. We'll put in capital as we think can support our businesses. So generally, yes, we expect the minimum capital to go up. How much? We yet to be advised. But as I said, it's only minimum, and Ghana's economy would remain one of the biggest in Africa. And banks here will, if you need to take advantage, would advise yourself how much you operate on or above the minimum capital.
Yeah. Given a maximum of about 300 million Ghana cedis, would that be a problem for the members, or it's something that, well, it's long overdue, so we will work towards achieving that?
Look, I think if you look at the total industry, probably a good half of companies, of the banks, would already have been sitting above, in terms of net shareholder funds, above the 300 million, and therefore it's just a question of going through the legal stripes to convert it into capital. There may be probably the lower third, who would need time to cover up the capital. But 300 million will not be out of the world.
Yeah. Some who also,
that's still less than $100 million.
Some who have also talked about the fact that why shouldn't it come from you? That always has to be the regulator. If your members all agree that we need to grow ourselves and not something that would be forced down on us.
That's why I said the word to stress is minimum capital. Is to operate in the bank, and because, in the industry, and because it's systemic and you are licensed, the central bank in their wisdom, decides what is the minimum capital for you to get in there. But banking is serious business. You take risk, there are a lot of things you do. And at the moment, if you look at the global accounting system, the amount of capital banks are supposed to put behind the risk they take in order to make money is growing and becomes significant. So if you're coming into the industry with a view to actually playing the game, you need your own equity capital. You need strong equity capital to enable you to play in certain parts of the industry. So it's a minimum capital. And if you're in the minimum, I'm not sure how much.
Now, CEO and founder of UT Bank, Prince Kofi Amoabeng, says commercial banks are being lazy in their dealings with small-scale businesses. Access to credit has been an age-long setback to the development of the private sector. Speaking in an interview with Joy FM's Inshira Ado on the Executive Lounge, he said banks are focusing on government loans as opposed to indigenous small-scale businesses.
In Ghana, the private sector is yet to develop to its full capacity. This is because of several challenges undermining the effective operations of businesses. Lack of capital as well as high taxes continue to stand in the way of the private sector and thereby preventing its meaningful contribution to national development. Some experts lament the lack of policies for growing indigenous business and say this must be reviewed. Speaking in an interview, the CEO and founder of UT Holdings, Prince Kofi Amoabeng, said banks prefer to lend to government because of limited risks involved in such transactions as opposed to lending to small businesses.
The government wants the money at 26%, and I'm supposed to lend to you at 32% with all the risks, probably inability to pay, and I have to write it off. It hurts my balance sheet or profit and loss. I wouldn't take that risk easily. I will lend to very secured companies, very companies that are quite blue chip, so to speak. Otherwise, I'll lend to the government. And therefore, the SMEs that we lend to will suffer. And as a matter of fact, there are a lot of non-performing loans in the books. And this is because interest rates are high, because we had a doom saw, because there are non-payments by government, and so on and so forth. There are a lot of non-performing loans sitting in the books of the banks, which is not healthy. You know, so if you lend and you are not able to collect, you have to make provisions. Then you cautiously lend. But in the meantime, as you cautiously lend, the money must go to work, so it gives the government who is ready to take them.
Prince Kofi Amoabing was speaking with Inshira Ado on the Executive Lounge, which airs on Saturdays at 5 p.m. on the Joy News channel on Multi TV.
The Dutch government is urging Ghana's new administration to prioritize the creation of a competitive investment and business climate. President Akufo-Addo has repeatedly maintained he would make the private sector the center of focus for the economy. Speaking to Joy Business at the official launch of the Ghana Star Growth Program that seeks to empower SMEs in Ghana, the Dutch ambassador, His Excellency Ron Stricker, was hopeful foreign direct investments would increase if government places the interests of the private sector at heart. Charles Aite reports.
Ghana Business Star Growth Program is an initiative of the Dutch government to boost SME competitiveness in the country. It is implemented through the Ghana-Netherlands Business and Culture Council, GNBCC, to, among others, train SMEs on the customer relations and marketing strategies. It offered an opportunity to bring together SME stakeholders in Ghana. The Dutch ambassador to Ghana, Ron Stricker, revealed the aim of the program is to aid government create more jobs in the private sector.
Obviously, SMEs are very important here. 95% of the companies in Ghana are SMEs. 70% of GDP is being created in Ghana. And of course, SMEs are job creators. And the same figures, very interestingly, would also apply for the Netherlands.
So what priorities do you think the government would have to place on privatization?
I think one of the most important thing is the improvement of the investment climate and the improvement of the business climate. I think this is, as a matter of fact, of course, the long-standing policy of the Ghanaian government over a longer period. But of course, we like the intensification that we see at the moment. I think with improvement of both climates, you have more investment. That means in financial investment from abroad, but at the same time also technology coming into the country.
The Chief Executive Officer of the Business and Council of Africa Ghana, Sam Poku, says business leaders in Ghana expect an improvement in the human resource base of the country to make university graduates employable. He tells Joy Business that government could fail in its quest to stimulate growth in the private sector if the country's human resource is not given adequate training to meet demands of the job market.
The government cannot do it alone. The private sector has got to put its house in order and develop the human resource capacity of the country. It's a talk of a lot of discussion on how to relate manpower development, that is how to link the private sector practical training with people who are in the educational institutions. There should be attachments, you know, as you move along the educational ladder, level 100, 200, and so on and so forth. You should be given training, attachments, even if during the vacation period, so that you will be introduced to business. You should also develop the mind so that people can think for themselves, not just chew and pour and pass examinations. This is what we lack. And you have to develop the human capacity of this country.
For Joy Business, Charles Aite reporting.
The Africa Center for Energy Policy, ACEP, is warning government against operating their Konsombo Dam at full capacity, saying any such attempt could threaten the plant. This comes as some key power plants like the T1 and T2, as well as the FPSO Kwame Nkrumah, are set to be shut down for maintenance. The dam has been operating below capacity for some time now, as the water level of the Volta River fell drastically due to inadequate rainfall. Speaking at a press conference, Deputy Executive Director Ben Boachi said the power situation could be compromised if government does not focus on addressing the financial challenges faced by the sector.
VRS has missed important maintenance schedules, which now threaten supply stability in the short term. The T1 plant, for example, will have to shut down because of non-compliance with maintenance agreement with Ansaldo, VR's technical contractor, to which VR owes about 2 million euros. Also, the T1 plant will have to shut down for about 2 months when Ansaldo returns to work. So beyond the fuel supply constraints linked to financial distress of the sector, indigenous supply of gas will also suffer when the FPSO Kwame Nkrumah goes out for maintenance. This will affect supply of gas to power plants in the Abuazi enclave. In the face of imminent shortfall in supply, Akosombo could be the next target, as the water levels have improved this year. We would want to caution against any attempt to run the plant at full capacity anytime soon, which has the implication of endangering the plant into recurrent inability to provide to its optimal level.
And that's all in business for tonight. For more business news updates, log on to myjoyonline.com/business. My name is Emmanuel Apuaji Riafi. Good evening.